Good morning, investors and traders, and happy Friday to you. This is Naeem Azam, Chief Market Analyst at AvaTrade's, and welcome to our daily update on our YouTube channel, during which we discuss several different opportunities in the crypto markets, in the Forex market, commodities, and Forex as well. Now, if you haven't subscribed to our channel yet, hit that smash that subscribe button, because it will really help you guys to understand whenever we go live. So it will notify you, and whenever the videos are uploaded on our channel, you will also be notified with respect to that. Now, in relation to the stock market, of course, yesterday we saw, the two days ago when Joe Biden he became the president, we saw before that as well, we saw this upward momentum very much coming into the stock market. But yesterday, obviously, that momentum started to reverse, and that goes back to our conversation of talking about that resistance line with respect to the DJ30, the Dow Jones futures on the daily time frame, because that had really pushed the prices lower. So if I look at the Dow Jones charts now, and then we see that price level of 31,175 is really pushing the prices lower. And when I switch the time frame from daily time frame to the 4-hour time frame, what I also notice is that the prices have fallen below the 50-day simple moving average as well. That is another key indicator that a lot of weakness has started to creep in. Now, if you are wondering why are we seeing this weakness, folks, we have talked about this weakness. We talked about the local pullback is due within the stock market. This pullback is going to come, and that is here. The reason for that is because we're still very much facing the coronavirus related restrictions when it comes to the equity market, and that particular factor is really making investors and traders very much concerned about the market, because every time the data is coming and more data is coming, what we're really seeing is on that data is that yes, there is there is some improvement, but a lot of weakness is still very much creeping in with respect to economic numbers, and that remains a major concern among investors and traders. And something else that we also wanted to focus on is that there are some sort of doubts as well with respect to Biden's 1.9 trillion, because obviously, it's not going to be really a walk in the park with $1.9 trillion. So let me break that down and make it a bit more simpler, because remember, as we've discussed yesterday, that the massive rally that we have seen in the stock market was very much driven because investors and traders were thinking that, look, the fiscal and the monetary policy is going to continue to support these markets, and hence what we will see is this massive rally into the stock market. And then that is what pretty much we've seen recently. And now stock market and then the investors and traders are still believing this particular factor, that look, what's going to happen is that the market is still going to be supported by the fiscal and monetary policy. So we should really continue to push the stocks higher. And that it was a major reason. But now I'm not saying that we are going to see a massive stock market crash or anything like that, but this is nothing but a retracement which was due for a long time. And that retracement is very much taking place now in this particular market, which is pretty good thing to see, because obviously you don't want it to see the markets continue to move higher, because that is just not healthy at all. Speaking of healthy correction, something where it is taking place is in the crypto space, because if you look at Bitcoin prices, they have dropped from their all-time high of nearly 41 or 42,000. Now, earlier today, they dipped below that critical support level of 30,000, but the notional support, or the more important support, is in around 27,000. And as long as we continue to stay and trade above that 27,000 price mark, I think the bulls will still very much stay in the play field, and they will continue to push the prices to the upside. So right now, the current correction that we are seeing is nothing but an opportunity for investors and traders who haven't been involved. But the reason for that is because if you look at the first move, the first rally, which pushed the markets from 20,000 to 40,000, that's how Bitcoin rallies are. Every time the major rally comes in, the prices will double. So I'm not saying that the current rally is over. What I'm saying is that if this rally is over, for instance, if we say that this rally is over, the next rally is going to be about $80,000 from here onwards. So that's literally doubling the price from here. Yes, the retracement and the consolidation can very much continue. Prices can continue to move in the sideways direction, and that could be an opportunity to get involved in. Now, when we move into the Forex market, and then let me bring out the euro-dollar chart, what we're seeing is a weakness in the dollar index is really helping the euro-dollar, because on the daily time frame, what we're really seeing is that prices are moving back above that 50-day simple moving average, something that we've described yesterday. The reason that I pay attention to 50-day simple moving average the most is because this particular average has the most importance among institutions and traders. And remember, during my career, I have worked as a hedge fund trader for Bank of New York Mellon, and I know that these are the moving averages where the institutions pay quite a lot of attention to. So I think that upward momentum is very much likely to continue. Same is also for a sterling dollar as well. We are still expecting that momentum to continue to the upside. Now, in terms of an oil market, as we've described, we did a video on the oil, crude oil 3 days ago, or just right on this channel, and we talked about the weakness in oil. That weakness could really be very much creeping in around certain price levels. So that is what really is happening. We are seeing that prices moving to the downside. The immediate support level that I can see is in around 51 to 51.50, and that is where we could see the prices moving higher. In terms of gold prices, the battle is very much on between the price level between the 200 and 100-day simple moving average on the daily time frame. The bulls do understand that, look, we have a confidence because prices are staying above the 50-day simple moving average, and as long as that continue to remain in place, we are likely to see more momentum. All right, that's all for now. See you guys next time.